meeting going. All right, so welcome everyone. And then for this week, we have created brief agenda. Let me share it in the chat for those who haven't seen it. You should be able to see it. And also, I believe that we have a guest speaker today as well. So I think we can maybe go through the first part very quickly, but the active polls, there's a discussion. So we can have the guest speaker speak, and if he needs to go afterward, we can.
Yeah, let me introduce Vahan, who is here from Switzerland, from Real Unit. And Vahan has been researching private currencies for quite some time now. Maybe you can introduce yourself, Vahan, and then tell us a little bit about your focus and what you will talk to us about today.
Yeah, definitely. Thank you, first of all, so much for having me. As Raphael mentioned, I've been working, let's say, with private currencies and different aspects, how to implement them since about 2019. I came to crypto relatively late, around 16, 17. Before that, I was more focused on the store of value function. How can we create money that effectively stores value over time? And also things like issuing bearer certificates that can be used similar to banknotes, but that are asset-based. So I'm more I come from the real world asset side, and I think that's why also Raphael asked me to say a couple of words. How I stumbled into the whole scene was 2009. I read a book by Friedrich August von Hayek, which is called The Denationalization of Money. And in it, basically makes the case that we need a complete separation between the state and the production of money, and makes the case with it with different arguments, such as that it's essential to have competition in every aspect of life. So that book went a bit further for me as well and turned me, let's say, into a libertarian, because I started implementing that line of thought on every possible aspect, from healthcare to education and stuff like that. So that's where it all started with me. And historically, when you look at the issue with government currency, it's not only when it's fiat currency like it's today. It's a theme throughout history. As soon as the state gets involved with currency, they mess it up. Like in the past, even when one used gold coins, they used to collect all the gold coins and then mix in copper and nickel, but give it the same nominal value to inflate the money supply, so they have more money to spend. So like even Voltaire a couple of hundred years ago said that all fiat currency in the end returns to their intrinsic value, which is zero. I'd like to shortly enter or talk about the functions of money and how I see them related to DAI or the MakerDAO. And first of all, medium of exchange. I think if one takes that function, DAI is definitely superior. You don't have any restrictions. I can trade with anyone worldwide. I don't need to fill out forms to transfer and stuff like that, as we have in the current banking system today. Unit of account, I would split that up because it's based on the dollar. I would say the dollar is a unit of account for the short term. The same is true for euro, Swiss franc, whatever, because in the end, you need to pay your bills in that currency. So for the short term, it makes sense. But if you have a liability, or if you have receiving funds in 10 years time, you have absolutely no idea what the counter value of that will be. And that goes a bit into the store of value aspect. And I'm personally not, let's say, a huge fan of the US dollar. If you look at the inflation adjusted value of the dollar since Nixon closed the gold window in the 70s, we're down somewhere like 90 or 95% in purchasing power. And what we're seeing now as well, more and more, is that the reserve currency status of the US dollar is being questioned by a lot of countries now. Now it's less than 50% of the reserve assets of central banks worldwide. So I would definitely, in the longer term, try to get away somehow from the US dollar, because I believe that DAI should survive for the long term, even not if, but when the US dollar collapses. So I think as a community, one should think how you can work with that. Raphael, you're laughing. I'm maybe probably saying something that people will disagree with, but I'm looking forward to the discussion afterwards. So I thought about, you can still have a combination of both. You can still say, okay, we're going to tie it to the dollar, but we can index it, for example. We can say that it's, for example, inflation adjusted. That would also give people an incentive. Me as a stable coin holder, I would prefer to hold a DAI if it's indexed to inflation than effectively holding the US dollar, especially now where you have inflation in the West, like in the double digits. I think there would be a lot of demand, and possibly that might even bring down the stability fee, because you would have such a demand for the DAI that's not only stable, but stable in real terms, which, yeah, just an idea, but we can talk about that later. So as I mentioned earlier, I come more from the real world asset side. I mean, the company that I co-founded, that Raphael mentioned, I mean, we're, I think, 98 real world asset based. So when I think about it, it might be a bit strange coming from me because I have that extreme real asset focus. But I had a look, obviously, over the years, MakerDAO and DAI generally, but also now more recently on the endgame proposal. And I really think it's a good idea to limit the amount of real world assets that you have, because one should have a system that's robust, that's sanction resistant. I mean, especially now, imagine you have news articles that Putin is paying Wagner soldiers with DAI or something, and then real world assets get sanctioned. So I think it's a very smart move to try to move towards limiting real world assets and the risks that you have of having too many counterparties. And when it comes to real world assets, I was thinking, what should the approach be? And the basic rule, I would say, is diversification. First of all, by country, not to have too many assets in one single country. So if something happens to that country, or if something gets sanctioned, then it's only limited to one country. What's important in that regard, in the political landscape we're in today, is to think in also geopolitical blocks, because if the Americans do something, the Europeans will do it as well. So diversifying across the US and Europe is not enough. I think one should think a bit more global to diversify the risk. And then the obvious things, like not only holding a single asset like treasuries, but going into, for example, gold, real estate, and other asset classes as well. And limit. I saw, I think, that you hold a smaller position, for example, with Société Générale, if I'm not mistaken. I think to me it would also be important to limit the single counterparty risks that one has. And maybe on a final note, usually the derivatives like futures or options are in a lot of cases used for speculative cases or to leverage. But I think in the case of DAI, if you're thinking about diversifying the assets, it might be an interesting approach because you can limit, you can gain exposure to, for example, the equity markets or the treasury market without having 100% of your capital inside the banking system that, I call it the sanctionable world. So that might be an interesting approach as well to try to limit your exposure that you have there.
How could that possibly work? I mean, Maker, as you know, is not an entity, so we cannot work directly with any legal entity. And so I think at the moment we have found pretty suitable arranger structures. But I think going forward, like how would it be even possible to bypass, for instance, let's say a banking system, even in friendly legislations like Switzerland, for instance?
During the call that we had, you had mentioned that that you have this arranger agreement and you are buying treasury bills with that, right? Correct?
That's basically the largest part of Maker's real world asset exposure is through Monetaris, and Monetaris is actually not buying treasuries directly, but through a money market fund that BlackRock is managing.
Okay.
So like
they're borrowing treasuries directly now. It's the debt ceiling increase. It's direct treasuries.
Oh, cool.
So it's, I mean, they're not in there now, but they will exist in the next week.
And that's via a direct interface to the Fed, or I assume that's not possible, right? It's like we would buy them from some kind of banking intermediary, right?
All right.
Mark,
So
I think it's addressed to you, the question, or?
Yeah, that was to Mark. So I'm still wondering, like, of course, it seems attractive to be able to bypass the banking system because clearly that's like a very natural place for legislation to kind of prohibit the proliferation of crypto. But the question is, how is that even possible from a practical point of view? Like, who's the partner then if it's not a bank?
We always partner with banks, with arrangers. Main partner at this point is Bank Signum, Switzerland.
And Vahan, since you mentioned that, like, how would that work in your, like, from your research, how have you seen private currencies bypass the banking system? I mean, the only thing that comes to mind here is this thing that happened in Austria somewhere in the 20s, where they had this small village Wörgl that kind of issued their own certificates, but that was very local based.
My point with bypassing, it wasn't necessarily bypassing, it was the idea of limiting the exposure. For example, if you say you have 100 million that you want to put into treasuries, instead of putting 100 million into treasuries, you hold for the counter value Ethereum. In the banking system, you short Ethereum and go long treasuries. So basically what you're doing is creating your synthetic treasury, whereby you have the vast majority of the capital outside of the banking system, you know? So even if the bank cuts you off, you would only lose the margin that you have inside the banking system, but you wouldn't, your 100 million wouldn't be blocked. That was the idea.
Oh, that's very interesting. And then there was a question by a delegate, a 0x Defenser, that said, if you could link to any good books or research papers that you know of that talk about private currencies depegging from major currencies. Because I think that the question has been discussed a lot, especially since Rune first mentioned it. And I think at the current moment, it's not viable. And I think it's probably never going to be very attractive. But I think why like one of the reasons I was so excited to have you here is that I think it's good to kind of think through what this would mean. So it's not something abstract that's like, oh, it's really bad and we shouldn't ever go there, or yes, it's unavoidable and we have to do it at some point. But what does it mean? Like, how does it work, and what are the implications for currencies? So I think any kind of historic references that you have there or research that you could point to, I think would be helpful just to illuminate what this space looks like. Because I think, at least from my point of view, and I think probably others like Mark have or others of paper have spent much more time thinking through the ramifications here. But for me, it's really quite an amorphous mass, and so anything you could link there would be super helpful.
Sure, I can do that.
Cool. So if there's any more questions to Vahan, then I think now is a good time to ask them. Otherwise, I think we should continue with our discussion, because we like this whole session lasts for an hour and we have quite something to go through. I think there's one more by Bona Publica. Any thoughts on stress testing and evaluating or identifying risk scenarios? I think that's for you, Vahan.
Is that related to real world assets, or how should I understand the question exactly?
Okay, that would be for Bona Publica. Maybe you can clarify. Yeah, stress testing real world assets.
I generally, or let's say I'm somewhat connected, let's say, to the traditional banking world, and the stress tests, the value at risk calculations, etc. To me, do not make too much sense. I like to look at things from a more like general approach, because the whole concept of deriving the term risk by historical volatility to me does not make sense. So that's why when it comes to real world assets, for example, what we do, we have a large part, for example, in physical precious metals. We keep them safe and insured in nuclear bunkers. I have a different approach of that. You need to look at risk. And so it's not a mathematical calculation of risk, but rather, okay, I have these assets in a jurisdiction that over centuries has been more or less stable. I put them in a place, even if there is war, it should be safe. And yeah, I would just natürlicher Menschenverstand. How do you say that in English?
Common sense.
Kind of. That's my approach, and to take it, and especially if you're talking about a currency, I would be more on the conservative side. Try not to have too much leverage, not buy real estate with 5% down and stuff like that. But I think that's clear to everyone to have the stability of the backing.
There was a very interesting discussion about value at risk, I think, recently, and I think the one thing that I also read about a lot is that value at risk was basically used by everyone during the 2008 financial drawdown, right? And I think it just assumes that the risk is somewhat Gaussian in distribution, and reality has shown that it can be quite separate from that, or very different distributions are at play there. So I think it's something, but it's like you can't like build a house on that, I think. Okay, so I think we have to move on. Thank you so much, Vahan. If you could send any research you find that talks about depegging or separating from a value anchor, and then what happens, I think that would be extremely appreciated. Thank you for taking the time. You're of course happy to stick around and watch our discussion about real assets in Maker. Yeah, thanks. Then I'll hand it back to Du.
All right. Well, thank you so much. And I think especially as we go, we're going to have a guest speakers. And just want to say that guest speakers' opinion doesn't necessarily mean the opinion of CVC or ABC itself, but it's just some different research thinkings and improvements that we can try to pursue or suggest, right? So that's good. And so, Rafael, I think we have maybe two options. We can either continue to talk about the real-world asset scope, or we can go back to some of the ongoing votings. What do you think is better?
I think, I mean, I'll leave it to delegates to raise if there's something urgent in the current voting that they want to discuss. Otherwise, I would move on with real-world assets.
Okay. Yeah, I mean, just that. So King also mentioned that she wanted us to rethink about requiring one MKR. So I just want to kind of talk about it because we did promise her that we'll talk about it. So, but
yeah, I mean, I think the point is very valid about like inclusivity, but I think you can have paths that give people agency even at one MKR that don't seem like it's charity at all. Like basically you could say like, you know, earn one MKR for like after a certain amount of contribution if you express interest to run a CVC for at least a year. So, right. And I think that could be open to anyone. It wouldn't be like, hey, if you apply for that, then you're low income. but we could still like raise the barrier. I don't know if it's a problem at the moment that it's so low. Like I haven't seen any spam in terms of CVC members. And of course, CVC members have to be approved by CVCs, or otherwise they don't even become members at all.
Yeah, I think that.
Yeah, sorry.
Yeah. No. I said that. Yeah, I mean, overall, I do think that requiring one NKR or just keeping the language like right now is okay. At least last time I checked the voting, it seems like it's like what 30 to 70, but we'll see. But I think that for now, we can just keep our bias toward that. And okay, seems like that Frontier said for other topics maybe it's not too urgent. So if any delegate wants to talk about some other voting topics, let us know. If not, we're just gonna go into reward assets growth, which is the topic that we're gonna continue to talk about. All right. Seems like we can continue to talk about the reward assets growth. So on the agenda, I also talk about some of the updates that are happening. We're also definitely going to talk about some of the language that might be helpful to be changed. But I do want to bring also attention to recent update from Monetalis, where they brought 1.27 million back to the surplus in the buffer. And I was just curious, like from the ABC perspective, like what will be some of the implications and the lessons we can learn, right? Like, is this something that shows that it has worked, that we want to pursue in the direction, or is it something that some of the process could be improved, things like that? Maybe we can just start from this perspective, and then we have a few others to go.
I mean, I think I'm happy that I see money coming back, so I think that's good. I think paper you mentioned that they're using a route that is a little bit more costly than it has to be. Can you elaborate a little bit more on that?
Oh, I mean, just there's a Swiss tax that they're subject to. I don't know if there's a better route. I mean, I know that banking partners are not exactly growing on trees, but it would be nice to avoid 30 bips fee on this amount of money.
Okay. Also, I got a quick question for Vigilante. At 104 last week, maybe. Fine. Oh, are we one behind? Maybe Kovalka can share with us. I mean, I guess if not, we can talk about two topics if you have time then. But let's talk about reward asset first then. All right. Yes. So first, suggested there might be some other ways to ensure it's more efficient, to ensure the growth in the long term. Appreciate that part as well. But I also realize that it's also kind of difficult for delegates or others to share their opinions about these things because it's more like can be opinion. So I'm sorry about that. That's my fault. All right. And then the next part, question about do we onboard any non-F collateral before sub-DAO 60s? I think Rafael wrote this question. Can you maybe share more like what you meant?
Yeah, sorry, just to touch back a little bit on the last part, because paper shared that we're currently paying a tax in Switzerland that we probably wouldn't have to pay in another jurisdiction. So Switzerland has a lot of pluses going in its favor, I think, at the moment as a jurisdiction. But of course, like I think the discussion about alternatives is valid, and if we can find ways to get out more, then even better. Does anybody know what the name of the tax is that we pay in Switzerland? Vahan mentions Verrechnungssteuer, which is like a accounting tax or something.
Swiss stamp tax.
Okay, can you type that in the chat? I'm sorry, I was having a hard time. Swiss stamp tax. Interesting. Yeah, I mean, I think it's like 30 bips. Of course, at the volumes we're seeing, this is quite a lot. So anybody who finds any ways to not pay that. I think that's still as safe as doing it in Switzerland. It's definitely appreciated. Regarding the next question about onboarding non-money market fund collateral. So I think we've seen Cogent Bank, and I think one more in the discussion leading up to the ratification of the pre-game constitution. And I think especially Cogent was basically an extremely sound proposal. But we just didn't feel it was the right time because we didn't have the structures in place to monitor such a proposal well or to handle it from our side. So I think at the moment we're really doubling down on treasuries, money market funds, and of course to Vahan's point, this means that all 95% of our risk in real-world assets is directly in the US, which is what it is. But I think the overall discussion for me is are we at a place now where we could even onboard other collateral, or is it too complicated and we wait until sub-DAOs can handle that?
Actually, I have a question regarding it, because I thought the Constitution kind of specified that we can only onboard money market fund, right, for now.
That's a good question. Does anybody here know what the Constitution is saying in that regard?
Yeah, I think that's the case because I remember when I was a delegate, I was reading about it. I also saw some question about it. But I think that, so I also saw comment from strategic finance team basically saying that okay, maybe we should expand some of the different collateral because for now, especially US Treasury bonds they give good yield, but who knows, maybe in the future they are not, so we might need to expand it. But I think that for now, the Constitution kind of insists on focusing on money market. But if I'm wrong, you can correct me. So I mean, which is fine, but I'm just thinking if it's part of the Constitution, then is it hard to improve it, or is it hard to change it? Because I think those steps might be different. How we should talk about it.
I think at the moment it's still amendable. I mean, that's why I think why I was raising the question. I think so the question is do we have the structures in place to even deal with that kind of collateral? And I think that's probably a question for Mark, because I think this will all basically land on strategic finance or steakhouses desks. How do you see that? Do you think you can what's the kind of complexity you'd be comfortable dealing with here?
Yeah, I mean, I think we can continue to onboard collateral. It's just a matter of it being compatible with the scopes. So to the extent that the DAO finds deals interesting and they're compatible with the scopes, we can continue to onboard collateral. We've got legal and commercial risk people on board now that can underwrite the deals essentially and structure them. Things are taking a little getting used to with the new endgame being passed, but I know we can definitely continue to do deals if the deals are good, I think.
I think that's a super interesting perspective, because just in terms of growth, I mean, I personally would like to expand real-world assets, especially outside of the US, because I think what's happening in the US at the moment, at least from what I'm seeing, is quite troubling, right? We've seen the SEC, being basically playing their cards extremely close to the chest, even under congressional questioning, and kind of effectively stepping out and not creating the clarity that we want, that we would probably need to build on a firm foundation here. I mean, how do you see it? Because basically we could ask for a change in the scopes to allow us to onboard good deals as long as they somehow fit into the maturities we are comfortable with.
I mean, I think it definitely has to be at least coordinated or recommended by a facilitator. So I think on the real asset scope, like if the facilitator side thinks that that's also the way to go, I think I'll feel comfortable touching it. I'm not really sure whether, like, because we ourselves are not experts on real asset part per se, so I'll be a bit hesitant. But I think Mark or others were about to say something. Sorry.
Yeah, I think doing deals outside of the US is definitely more attractive right now. You know, and there's a lot of opportunities, I think, to do, you know, social good outside the US, because access to capital in the US is much better compared to, you know, Latin America, you know, APAC and other regions. And the yields in those regions are generally higher to compensate for the risk you're taking. With that said, like the cost of doing those deals is a little higher. So it's a little bit of a trade-off. You know, they're generally riskier deals, and you have to understand like the local jurisdictions, like legal landscape and such as well. You know, that said, I still want to do deals, or I think the DAO should do deals in the US if, you know, they're, if we can do it, and, you know, the legal landscape continues to improve. But, you know, each deal is going to have its own specifics, you know, depending on like the entity structure and the setup. A lot of them try to use entities outside the US to facilitate these deals, just because, you know, the SEC and other, you know, regulatory bodies are either not being super clear or, you know, shown to be a bit hostile towards the industry.
It makes sense. I think that, so with regard to also your point, Rafael, I think in the suggested, I guess for real asset scope, we need to make recommendations or like suggestions, right? So I think what we can do is then, if you believe that such suggestions should be submitted, I think we can like look through it and then submit it. Actually, talking about it, do we have I guess I need to go and check the Excel. Like, do we have suggestions for changing real asset scope from our like you know, delegates that are helping? Yes, I think that ideally, like, you know, delegates can submit some of the suggestions before the call, so we can go over it. Okay, so in the public post the suggestion about the stress testing. Is it okay for you to actually? Should be on here. Okay, so true name brings up an interesting point, which is who should basically bring the deals. But so arrangers cannot bring deals, is it right? True name?
I don't think so. I think arrangers should bring deals, right? Like that's basically the role.
Yeah, I think I read in the Constitution that they can bring deals. In fact, I think that the Constitution kind of makes it that others cannot like bring deals. I think was the kind of problem that I think that, I mean, the issue was that so many people apply for like real asset, and then the new Constitution didn't want to have that, right? So, you know, they would have like trusted arrangers who can source, you know, based on their expertise. I think that was the idea. Yeah. Yeah. So, you know, Patrick mentioned that arrangers can source the deals.
Okay. Yeah, then I personally would like to see some language in the scopes that would allow Maker to grow with real world assets that are not money market funds. I mean, we can start developing them, push it to protect the DAOs or sub DAOs as soon as they become available. But I think why should we should we wait and should decline all the talks of potential partners in the meantime? Then because then we would have to start picking that up again at some time in the future.
Yeah, but no, I mean, I understand your side as well, but I also kind of can see that at least in the current structure, like that's I think how it is. But I think we can maybe clarify some of the language too, or maybe we can even suggest a larger change. After all, I think that like even if we make like suggestions, the governors need to accept them to reflect it. So if, for example, we are like, okay, well, maybe we should, well, as a DAO, expand different kind of real asset, collateral beside those, and then if the government likes it, they will accept it, I guess.
Yeah, totally. That's my reading as well. That basically so our role is just to give like a broad sense of direction, and then it's up to facilitators and the workforce to actually draft language. And of course, like we can't approve anything, right? We just
yeah, we cannot approve anything. And then actually from the conversation we had last week, it seems like we cannot also directly change it to this per se. At least that's what I heard. It's like we can give a direction of how they can change and put it to vote, but we ourselves don't actually put the voting for the changes that we are making.
Exactly right. We don't, like, I think as far as I've understood it, we don't even trigger any vote. Like we're really just about direction. And I think the overall direction for Maker, at least from my understanding of growth, would be to grow, but also to diversify. And this is why I think it's important to onboard either money market funds from other jurisdictions or even non-money market funds, as long as the durations aren't super high. And there was this point by 3F about commercial mortgage-backed securities, but I think those maturities are generally way higher than what we are comfortable with in the scope. And I think that kind of makes sense.
Yeah. Well, I think that maybe next time we talk about real asset, we should have a orange. Actually, I think I saw. Okay, maybe he's not here anymore. I think I saw Oranger teams here, so I was curious about their perspective. But...
Maybe we can
Rajiv is here.
Oh yeah.
Yeah. So maybe Rajiv can also share about his perspective. Rajiv, are you here?
Listening in, do.
Oh,
so
okay.
Yeah, I mean, listen, the pros and cons with going out of money market funds only. So I mean, I'm sure that will be debated. And yeah, I guess like everyone, I'm also trying to get my head around where the roles and responsibilities lie. And like, this is one of the first CVCs I've come into because I was quite interested to hear what the discussion is and what sort of decision making is taking place, in the hope that it sort of gives us guidance of where to focus.
All right. Yeah, I mean, I agree that it's all the early phase. I think everybody is also trying to adjust to new system. Just quickly to respond to Jay's question about like what I hope to achieve long-term in Growth ABC. I also refer this question to Rafael as well, because on I think minor side, like we might think differently. But at least for me also was like, how can we ensure that Maker can grow? And then, so there was actually a forum post about it as well. And then the question became, well, growth is very general sometimes, right? Like, is it growth in DAI supply? Is it growth in DAI users? Maker price? Like, what is it? And then I said that like, I intentionally made it broad, not like too specific. Like for me, if it's like, if somebody wants very specific, then they should either create their own ABC or split and create it, right? Because you can have very specific focus, but for me, what's the growth can be kind of general. I think the better question is what is against growth, right? Like, what would be some of the votings that actually undermine growth? And I think it's kind of easier to think about that and then say that, like, for example, if there are different experiments and expansions that can help Maker grow, then that's kind of my long-term goal for it. But if it's something that But that doesn't necessarily mean that then we are gonna rubber stamp all the budget approval, right? Because you can also make a good case that rubber stamping everything, or especially having large budgets without not much accountability, is going to undermine growth in the long term because resources is finite. But for this one, I don't actually want to directly make a decision what is growth per se, unless I'm like required to actually give like very, very specific definition and all the examples, because I think that it's better to also leave the kind of autonomy. But Rafael can also share his perspective real quick. But we actually get this question a lot, like almost every week. So it's not that we don't want to respond. It's just that I feel like maybe we should pinpoint to a document so we don't have to repeat ourselves.
Yeah, I like that. I think what the two questions that really stick out to me was now Rajiv and Derek on the last call that basically are looking into CVCs for some guidance where to focus resources. Because I mean, since there are different CVCs with different perspectives, of course, this is not a picture in when you zoom out, it probably has some contradictions. But I think for us, I think just giving these kind of broad guidelines that focus on growth is something that we can definitely do. And here I think we can just take these questions, for instance, like Derek's questions last Wednesday, and just say like, hey, do we want to move to L2s? Like, how should that work? Or like with real world assets, do we want stablecoin diversity? Do we want non-money market fund real world assets? Like, I think these are questions that we can answer, because as like we don't really make the decision, but we can still represent an opinion. I think that's actually our main function here, is to have as clear an opinion as we can possibly have.
Yeah, and I think to continue with that, we can, because I know that we have like I think 15 minutes left, so maybe we can also go into the stablecoin diversity. And this was actually something that has been pretty, I would say, both controversial as well as discussed a lot, right? So so Rafael wrote this question, but maybe can you share more about it? I assume you meant like USDC, like and then like the Paxos and different stablecoins, right?
Yeah, I'll just briefly go there, and then Mark has also a good question that I want to be sure that we cover. I think so. We had a big discussion about Gemini and Gemini USD, where we have some exposure, then reduce the exposure, wanted to go to zero. Now we're somewhere in between that at like 300 something million. Then Paxos had a proposal that unfortunately had a very high debt ceiling attached to any yield. But the overall question is like, is it good to have a diversity in stablecoins, like with multiple issuers, or is it actually even worse from a perspective of risk? Because I think the discussion here is, let's say we have everything in USDC and we don't accept any other stablecoin, and we come to some satisfactory conclusion of what to do with the USDC, so we get yield, and we have some promising things out there with Coinbase and Monetaris and so on. Then the question is, okay, so then if Circle bans us, then this is existential risk. But even if we split it in three, if one of these three decides to ban Maker, then it's still existential risk, even if we only lose 1/3 of this collateral, because the sums are so high there. So I think, and I really haven't come to a decision here, is like, is it better to have all the eggs in one basket, have one stablecoin that we trust and know and work with, or should it be multiple? I mean, from a risk point of view, for instance, that's a really good question, I think, for either Mark or Monet. Like, what's your opinion there? Is that I'm really interested in, like, is diversification here something that's desirable or not?
So Mona says that, well, because in the protocol you cannot see the comment, but he says that it's good from a risk perspective, but more from a commercial perspective. So he says that from both risk and commercial perspective, he thinks it's a good idea.
Okay. Yeah, I mean, I would subscribe to that. It makes a lot of sense to me. We establish good partners, and we put the name out there. So I think sounds really good to me. I don't know. What's your opinion?
Well, so I think that for this one, the suggestion has changed like over time, right? Because I think initially the idea was focusing a lot on USDC, but we have also seen, for example, what happened with the Silicon Valley Bank, and then that also kind of led to having increasing exposure to Paxos and the Gemini USD to trying to reduce about USDC. And I think the Constitution also tries to kind of respect some of it as well. So I do think that maybe at least having some diversity is good. I think the trickier question really comes from like how to prioritize them, because as we saw, like different stablecoin issuers has approached Maker with different offers, right? Like so they would, for example, for the Gemini, they also had like, like by allowing Gemini to be used in Maker to a certain degree, like we're gonna give some reward for it, right? Back to Maker as a marketing fee, what they say, or like we already do with Coinbase with USDC and others. So I think that the more important question would be like how much we should also consider such offers, because you can imagine that like we can have a diverse stablecoin, but if one is, for example, willing to offer 4%, while one is not willing to offer anything, well, sure, from the diversity, it might make sense to have maybe some of that like that doesn't give any reward, but it makes more sense to go with the ones that give more, right? Especially if the risk profile is similar. Yeah, at least that's kind of how I view it. Especially like the amount is pretty large, where like Maker, when stablecoins come in, they can even grow to like billions, and that's not a small amount, right? So I think that we as the Maker definitely has that leverage, and definitely should use that to try to get more reward if possible. Okay, and then Mark also shared the perspective. I'll definitely read it as well.
Yeah, thanks, Mark. And I think we have some more minutes. Maybe we can touch Mark's question here about like what to prioritize for growth. So from my personal perspective, I think Monetaris debt ceiling was approved to be 1.25 billion. I think making sure that happens, but it's already on the way. So I think I'm not worried there. After that, I would love, so for me, it's really about this vision of Maker being this unbiased world currency, right? So I think, and that's why I kind of really love the spirit of the Cogent deal, because it was like small businesses, short maturities, great partner, like stuff like that. I would love to see that, because it's just like, for me, it just fits very well with for me the mission of Maker, so to say. So this is what I would personally prioritize, but maybe Tu has another perspective here.
Yeah. So for me, it has been that focusing more on the especially growth as in revenue for the protocol has been kind of my idea regarding growth, because technically you can also grow for example, let's say on public goods, but I think that's more fitting for example, refi CVC, or maybe you can focus on growing for like efficiency, but I think that's more fitting for, let's say, key CVC, for example. So at least from my end was like, okay, well, how can we make sure that revenue is grow, that Maker basically is able to also use that to experiment more and also expand more, right? So in terms of real asset as well, it's like, okay, what can basically Maker, like what kind of system and the strategy and the structure can give Maker more revenue and also more profit, right? Like, because even if it gives us, say, like billions in revenue, if the cost is much higher, okay, maybe that's not really a good way to grow per se. So I know that partly is always subjective, but I think that how to increase the revenue and the income for Maker, I think is something that comes to my mind as a priority. Yeah, I must admit that compared to Raphael, I'm probably less concerned about the nature of DAI itself. Like I know that because I feel like the DAI can evolve in many different ways. Who knows, maybe it can be like, for example, depegged. It can evolve into many different forms. But I think what's important is the maker protocol itself is about like different innovations and also technology, right? So at least that's kind of how I view it. But who knows? Maybe he disagrees very strongly that next day we might get a divorce paper in splitting or something. I hope not.
No, I completely agree. I think that's a really healthy focus. I think, yeah, we without profits, we can't do anything.
All right. So Mark also asked this question. Maybe you can respond. Because I feel like that was also in your domain.
Yeah, organic DAI demand. So I think we touched upon it in the last call. I mean, maybe Mark, you have some ideas how to do that with real-world assets. I don't, off the top of my head. I think we should aggressively grow in the current like ETH ecosystem, and with that I mean like layer 2s and all the DEX protocols there. I think Nadia would be totally down to do that. I think there's some risk considerations, but I think just having a system that can iterate quickly and just incentivize DAI usage on places like Velodrome, like GMX, like all these new chains where the hot stuff is happening in DeFi would be amazing. And that's how I think we should drive organic DAI demand in the DeFi ecosystem, in the crypto ecosystem. If you have any ideas how we can drive DAI demand in the real world assets space, then I'm totally open for any suggestion or like any of the delegates here too. I mean, opportunities for growth. I mean, this is the place, right?
Yeah, I mean, I also like that, like especially from experience back at like Maker Foundation, is one of the big selling points as well as interest for Maker, like DAI, was actually DSR, because DSR, especially from those that were kind of concerned about DeFi risk, or those who were want to have that kind of yield, like DSR, especially back then, like DSR was almost like 8%, right? So it was very attractive as you can imagine. But even for now, like if you look at Aave or others, like stablecoin yield, just like plain just for supplying is like what 2% or something. So I think that if Maker's DAI can, for example, provide yields by DSR like higher than that, then that's also going to drive a lot of demands and also a lot of integrations. Like this was also time that, for example, like Compound integrated DAI natively, as well as some of the other mainnets through bridges, right? Because they realized that it's much easier to have DAI that gains in, for example, reward, and they use that as base to help them. So I think that also can be one of the ways. I know Strategy Finance team has kind of suggested ways to do that, and also suggest to raise DSR. So I think that also can be one of the ways to really increase it. Okay. Since we only have like 2 minutes or so, is it okay if you just quickly go through some of the related governance discussions? Like it's not directly on the scope per se, but it's related to scope, and maybe we can just briefly talk about it.
Sorry, I was just reading the chat. Can you repeat?
Oh, no. So we have like 2 or 3 minutes. So I just want to take a time to talk about some of the related governance discussions, like real quickly. Like, is that okay?
Yes, please.
Right. Yep, sounds good. So it was on the forum for a while, but I just want to maybe have us kind of discuss briefly on it. So one was about ML opportunities in Maker and the candidate interest. So it was about somebody who was, I would say, interested in Maker for a while, but I also quickly realized that even if one is interested, like what's really the process behind it? So if you remember from the first week and the second week, all the discussion was about advisor, right? Like potential advisor. But the question became, okay, but how do we actually onboard advisor? Like, what's the process? Like, do they have to present them like the candidacy, or is it like facility to bring in? So I think that maybe it's good topic for us to discuss, because I think it will bring up again in the future when we talk about, okay, we need to have an advisor. Like, what's the process for getting an advisor? So if anybody has any clarifications or comments about that. Also, regard to Mark, like exchanges using like legal concerns, actually they didn't. And then, I think some parts are classified, but the parts that are not classified is that like exchanges were actually pretty happy about using DSR, and also they did the legal like reviews and everything. So, like a lot of exchanges also integrated DSR, right? Like OKX was one of it. Also, Coinbase was supposed to have it, but like DSR was like 0%, so it didn't really matter. So you can imagine that like it was actually a very popular, and then a lot of them also did a lot of legal reviews, and it was fun. Okay, but I feel like the topic about the application for advisor probably is not too popular topic because nobody comment on it. Okay, so I think so next one is I think more popular topic potentially. So we have a maker arranger proposal from Credix Finance. So I think this also applies to existing maybe facilitators or arrangers. The question about how can actually one apply for an arranger, and is this the right process? Like, can somebody, for example, go there and they say, I want to be an arranger, and then the facilitator puts that into vote? Like, is it the process, or is it not? Maybe like, if somebody can clarify. Okay, so Patrick says it's defined in the scope. Facilitator has to recommend a vote. Okay, so in regards to that, so anybody can go and apply for an arranger, right? So like, for example, Credix Finance, they go to forum and say, I want to be an arranger. But for that vote to be, let's say, take place, facilitator has to say, okay, let's give them a chance to, go through voting, right? Correct. Okay. So that is interesting. So another question then is that, so if, for example, arranger or applicant wants to present their case, because if you remember, like back then, Maker would have like the weekly calls, right? Like Maker governance and risk call. If they want to present it, what would be the best way for them to present them? Because actually, Rafael, I had this discussion, and then we don't think that AVC is the best place for them to present, because also I feel like they would be like too biased in a way. But if you can give some guidance, that would be very helpful. Okay, so just forum posts. Okay.
I mean, they can record the presentation and link to that in the forum post. I think that's fine, and then people can watch the presentation, ask questions on the forum async, and they can answer async. That's all right.
Yeah, I agree. I mean, I just don't want the ABC calls to be like where, like, for example, applicants come to ABC calls to kind of like promote themselves, right, per se, because I don't think that, I mean, maybe we'll have like rules clarified that that's like encouraged. Okay, then maybe we'll do it, but at least for now, like, I don't think that's okay. So
yeah, we have so little time here. I think it's there's no way we can.
Yeah, okay. So we're already over time, so I think we can.
No, I mean with arrangers or like possible arrangers pitching and deals pitching in the AVCs, I think that would not be feasible just in terms of time constraints. I think it's just not.
Okay. Oh, yeah. Okay. So you meant time constraint that way. I thought that you meant like the call.
No, today that's fine.
Okay. All right. So I think we talk about all the topics. If you're a week behind on topic, do let us know. Then we'll just talk about 2 topics next week to catch up. Sorry about that. But yeah, I think we talk about all the things. Is there anything else that we need to discuss? Rafael, anything else we missed?
I don't think so. I'm fine.
All right. If that's the case, I think maybe we can close the meeting now. And then have a nice weekend. Well, soon weekends.